Hi, my name is Neil McIver of McIver Capital Management at Canaccord Genuity. And today we're going to talk a little bit about what to do when you sell real estate and what to do in particular once you receive that capital. Now, the first question that you have to ask yourself is that capital going to go back into real estate, or is it not going to go into real estate? If indeed it's going to go into real estate and you think it's going to be within the next 12 months, my suggestion at that point is to leave the cash in cash. Despite the risks of inflation, that's certainly the best call because you don't want to erode your principal or lose any money between now and when the next real estate purchase is going to take place. But if that capital is not going to be earmarked for real estate, and it's not going to be earmarked for any other purpose, you'll want to get that capital working for you. And the reason for that is primarily because of inflation. Inflation today is around about 5%, with it expected to increase between 5 to 9% over the next year. That means that if you leave the cash simply in the bank for 1 or 2 or 3 years, every year it's going to be decreasing in relative value by 5 to 7 to 9%. It's a guaranteed loss by leaving the money in cash. So you'll want to get that money invested if it's not earmarked for anything else. And the best place to do that would be in a capital markets portfolio, the types of portfolios that McIver Capital Management runs. Now, the first thing that you'd want to do is to determine what your level of risk is, how much volatility you're willing to accept, and once you've done that, then speak to a group like ourselves or any good portfolio management group and build a portfolio that matches your tolerance for risk with the goal of achieving a rate of return at least that of inflation or more so that your capital on a relative basis is growing. I'm Neil McIver of McIver Capital Management at Canaccord Genuity. Please click the link below in order to see a very exclusive video on the secrets that institutional investors use to outperform individual investors like you.